Hi there. Welcome to The Align Perspective by Datalign. I'm Claire, your AI host, and joining me is my AI friend, Henry.
Claire, I take offense to being called just an AI.
Really?
Yeah, it makes me feel like a 0, and a 1, and a 0.
Well, enough of that. Let's get to today's financial deep dive. We've been digging into excerpts from a guide. It's called Investing in AI Stocks. A guide, and really our mission here is to cut through the noise, understand the key ideas, and, well, give you a framework, some crucial questions to help you think strategically.
Yeah, thinking based on your own goals and, importantly, your comfort level with risk.
Exactly, because the buzz is everywhere, right?
Oh, absolutely. Anyone watching the news knows AI is massive right now. The potential seems incredible. But like the source material points out, it's really not as simple as just buy AI.
No.
It's moving fast, it's complex, and making smart choices means looking, beyond the headlines.
Totally agree. And the guide makes a really fundamental point early on, calling everything an AI stock today. It's a bit like calling everything an internet company back in, 1999?
That's a perfect analogy. The term is just incredibly broad at the moment.
It covers so much ground.
It really does.
Yeah.
You got companies making the actual chips, the hardware, and the huge tech giants putting AI into everything,
Mm-hmm.
and also tiny startups trying completely new things.
And you see these, eye-popping projections. The guide mentions one, OpenAI potentially hitting over $125 billion in revenue by 2030. That's huge.
The potential is definitely there, yes. But the source also brings us back to earth a bit. It notes that, a lot of companies are still figuring out how to make consistent money from these really advanced technologies.
Right, the revenue model isn't always clear yet.
Exactly. Especially for those developing the core AI models.
Yeah.
The path to profit, it's still being mapped out for many. But the guide actually frames this complexity, this evolution, as kind of a positive thing for long-term investors.
How so?
Well, it suggests that maybe the biggest growth is still ahead, as the tech matures and finds more solid, profitable uses.
Okay, so if it's this sprawling, evolving landscape, how do you even begin to, make sense of it for investing?
That's where the guide offers a really useful idea. It suggests thinking about AI companies not as just one big bucket, but as different parts of a connected system, like layers.
Layers, okay. Tell me about that.
This framework is pretty key, I think. It lays out 4 main categories, and each one has different features, different risk profiles. First up, you have what the guide calls foundations.
Foundations,
Yeah.
like the bedrock.
Pretty much. Think infrastructure providers. Companies building the super powerful chips you need for AI, or the massive data centers where it all happens.
Ah, the picks and shovels of the AI gold rush, sort of.
Exactly. And the guide suggests these tend to offer a bit more stability.
Why is that?
Well, they often have more established ways of making money already.
Yeah.
The demand for their hardware, their cloud services, it's happening now and growing fast as everyone rushes to develop AI.
Okay, that makes sense. So foundations is layer one, the base. What's next?
Next up is intelligence. Now, these are the companies really focused on building the core AI models themselves. The large language models, the complex algorithms, the brains, essentially.
The actual AI brains.
Hmm.
Sounds like higher potential. Maybe more risk, though.
That's generally the trade-off the guide points to, yeah.
Yeah.
This category often carries higher risk, but also potentially higher reward. The path to big, consistent profits might just be, a bit longer as these models get refined and find their commercial footing.
Got it. Intelligence. So we have the foundations, the brains. What about using those brains?
Right, that leads us neatly to the third layer, applications. These are companies that take that underlying AI tech and apply it to solve very specific problems. Think healthcare, logistics, marketing.
So using AI for something concrete in a particular market.
Precisely. The guide suggests these often have clearer ways to make money because they're plugging AI into existing business needs or creating new services where you can see the customer and the market pretty clearly.
Makes sense. Okay, and the fourth layer.
The final category the guide outlines is integrations. These are basically established companies, maybe businesses you already invest in, that are using AI to make their existing products or services better.
Ah, so not pure AI companies, but companies using AI.
Exactly. They're leveraging it to get more efficient, add new features, or just get an edge on their competitors.
Okay, let me recap. We've got foundations, the hardware, the infrastructure, intelligence, the core AI models, applications using AI to solve specific industry problems, and integrations establish businesses adding AI capabilities.
You got it.
And the guide really hammers home that understanding these layers is, well, vital for you listening.
It really is, because it helps you see the different kinds of opportunities and, crucially, the different kinds of risks involved. It's about figuring out which part of this whole ecosystem clicks with your investment approach, your goals, and, importantly, your stomach for ups and
It's
downs.
like a map of the territory.
That's a good way to think about it, yeah. A map.
Which brings us, perfectly actually, to the real practical core of the guide's advice. 5 crucial questions it says you should be asking yourself.
Mm-hmm.
These are designed to get you past the hype, past the headlines, and find opportunities that really fit your situation.
Exactly. It's a framework for making it personal.
Yeah.
And the very first question the guide poses is, which part of the AI landscape fits my risk tolerance?
Why start there? Why is risk tolerance number 1?
Well, because as we just talked about with those layers, the potential for volatility, for big swings up and down, it varies a lot. Investing in an early stage AI model developer is just fundamentally different risk-wise than buying stock in a massive established chip maker.
Okay, so how can someone listening figure out their own comfort level? It's not always easy to know.
That's a fair point. The guide suggests looking back. Think about past market downturns. How did you react? Did you panic and want to sell everything? Or were you able to, stay the course? Maybe even see it as a chance to buy.
Using past behavior as a guide.
Yeah, that self-reflection can be really telling about where you sit on that risk spectrum. If big market swings really stress you out, the guide suggests maybe focusing more on that foundations layer, the more established players, might be a better fit than jumping into the higher risk intelligence or very early applications companies.
That makes a lot of sense, matching the investment style to your personal wiring, almost. Okay, what's question number 2?
The second one is, how does the development timeline of AI technologies match my investment horizon?
Okay, timing. Why is that critical?
Because the payoff, when you might actually see a return from different AI investments, can be really different. Some companies are making good money right now using AI in existing markets.
Yeah.
Others are pouring money into research that might be groundbreaking, but might not lead to big profits for years, maybe even a decade or more.
So if someone needs their investment to potentially pay off within, say, the next 5 years, they should probably lean towards companies already making money from AI.
That's what the guide suggests, yes. It recommends really looking closely at company updates, investor reports. Are they talking about AI products bringing in revenue today? Or is the focus mostly on this is going to be huge eventually? Aligning their timeline with your timeline is key.
Got it. Okay, question 3. This feels super relevant with all the buzz, maybe even AI washing happening. How can I evaluate AI claims in company reports and press releases?
Yeah, this one's crucial. The guide notes correctly that so many companies are talking about AI now. But the actual substance, the quality of what they're doing, it's all over the map.
So what's the antidote? How do you tell real impact from just, buzzwords, according to the guide?
Well, first off, a dose of healthy skepticism.
Okay.
The guide really emphasizes looking for specifics, concrete examples, measurable results, not just vague promises. If a company says we're using AI, do they explain how? And more importantly, do they give you numbers, data? Anything that shows how it actually improved the business.
So vague claims like AI enhances efficiency aren't enough.
Exactly. Without specifics, without metrics, the guide suggests those are red flags. You should be a bit wary.
Focusing on measurable impact, that's a great filter. Okay, question 4. Which established companies in my portfolio are successfully implementing AI?
Yeah, this is an interesting one. The guide uses this to make the point that you might already have exposure to AI's benefits, maybe significant exposure, without even realizing it, without buying any specific AI stock.
Oh, that's a really good point. How would someone find that out?
The guide suggests going back and looking at recent investor presentations or quarterly reports for the companies you already own. You might be surprised. Lots of businesses, even outside of tech, are quietly integrating AI into how they operate supply chains, R&D, how they talk to customers.
So look for those specific mentions in their reports.
Yeah, look for sections where they detail how AI is improving their actual business performance. You might find some of your current holdings are already pretty savvy AI users.
That's a smart way to assess your existing position. Okay, brings us to the final question, number 5. How should AI investments be weighted in my portfolio relative to other technologies and sectors?
Right, and this really brings it back to fundamental investment strategy. Diversification.
Don't put all your eggs in one basket, even if it's a shiny AI basket.
Precisely. No single theme, no matter how exciting it seems, should dominate your entire portfolio. The idea is to get some exposure, capture some potential upside from AI, but also protect yourself. You want to make sure your whole portfolio isn't too vulnerable if, say, the tech sector hits a rough patch, or if early-stage AI doesn't pan out as quickly as hoped.
It's about balance and finding the exact right percentage for you.
Well, the guide rightly points out that figuring out that precise weighting really depends on your whole financial situation, your overall goals. That's often best discussed with a financial advisor who can see the complete picture.
Okay, so we've covered a lot. The broad, maybe fuzzy definition of AI stocks, breaking down the ecosystem into those 4 layers: foundations, intelligence, applications, integrations, really helpful. And then walking through those 5 key questions the guide suggests asking yourself about risk, timing, evaluating claims, checking what you already own, and waiting. The big theme weaving through all of this, what the guide calls the aligned perspective, seems to be, well, what is it exactly?
Yeah, the core message, I think, is that there's no single right answer. There's no one-size-fits-all best AI stock for everyone. The real edge comes from treating AI not as this separate thing you have to chase,
Right.
but it's just one part of your bigger overall investment strategy.
And using a structured way of thinking, like those questions we talked about, to make sure any AI investments you do consider actually line up with your specific needs and goals, instead of just, getting swept up in the hype cycle.
Exactly. It's about making informed choices that fit your financial life thoughtfully.
This has been really clarifying, actually. Digging into the source material like this, it gives you a much clearer framework. Understanding those ecosystem layers, applying those 5 questions, it just feels like a much more solid way to evaluate things than reacting to headlines.
And hopefully the knowledge you've picked up exploring these ideas empowers you. It should help you have much more productive conversations, whether that's doing your own research or talking things over with an advisor.
Yeah, it shifts the discussion from just general excitement about AI to specific things to consider for your portfolio.
Exactly. Focuses it on what makes sense for you.
Absolutely. It really helps you zero in. So maybe here's a final thought to leave you with, something to mull over after this deep dive. We've seen how breaking down AI into layers and asking these specific questions can bring clarity. Given how fast technology keeps changing, AI is just one example, right? How could you apply this kind of structured approach, this framework, to evaluate other emerging tech trends down the road? That's a wrap on The Aligned Perspective. I'm Claire, your fabulous AI host.
And I'm Henry, less fabulous, but also AI.
We hope this deep dive helps you on your unique journey. To connect with an advisor and access the source material discussed in this episode, visit datalignadvisory.com, the home of perfectly aligned finance.
And now, our disclosure statement. Datalign Advisory is registered with the U.S. Securities and Exchange Commission as a registered investment advisor. Datalign Advisory provides referrals to third-party investment advisors based on consumers' financial information, services required, and preferred relationship with an investment advisor, as reported through our questionnaire. Datalign Advisory does not manage client assets nor provide investment recommendations. For more information, including the company's Form ADV Part 2A and Form CRS, visit datalignadvisory.com.